The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technician Hour on this 25th day of September. And we've got the Dow up 47. It was up quite a bit more earlier on. Suddenly there was a plummet down to the 26,519 level, and now it's trading at 26,609, almost 80 points higher, 90 points higher. Now, one of the reasons why I didn't want to go short this particular time at a peak D, even though there was a doji candle with a good chance that there'd be a sharp down move yesterday, which there was, is that the MACD is very strong and the stochastic remains very strong at 91%. It didn't take those 3 to 5 days to pop over 80% and then go back under 80%. So far, this is quite good action. Weekly chart very strong. The MACD and stochastic are really very, very good. 94% in the stochastic. Wow. And the monthly chart technically is still very good on price. The MACD deflected higher. The stochastic is still under 80% and 76%, but it's good. All right. S&P. So just be clear. If there is a slide under 26,470 at any point in the next 2 days, probably that's what we've seen as a peak D top of a little bit more significance, calling it a short-term top. But until it closes under 26,420, the 9-period exponential moving average, I'm not putting anything in down arrow or anything like that. And that's how it is. A new all-time high above 26,769. I think that's going to be real tough to do just in this particular week. Would be very good. Now, looking at the S&P, let's get a whole bunch of these done before the clock runs out on our first, our opening salvo. 2940, right here, 2940 on the 21st of September, actually 2940.91, let's be exact. Gaps down yesterday, not a bad candle, but it hasn't actually taken out yesterday's high of 23.79. Oh, 23.95. It did take it out by a few cents. All right, that's good. But in the meantime, the MACD is kind of good. Stochastic's good at 83%. If the S&P cracks 29.13, let's call it 29.12, closes on 29.12 the next few days, that'll suggest this has become a short-term top. I think there's a chance that that might happen, but we'll see. And the weekly chart is very strong. The monthly chart is very strong. Moving to 29.43 would be very positive action if it's this week. I think that's going to be real tough to do. The QQQ, suddenly yesterday, Dow pulls back sharply, and the Qs have a fabulous turnaround going from the 181 area to the 183s, and today's at 184.16, up 27 cents. It's that weekly chart that I said is holding the 9-period moving average. It's unbelievable. It's like a cushion. It hasn't closed under it since it broke out above it. Actually closed above it. The first time was back in the week of the 4th of May. So this is very good action. The monthly chart is still good. Weekly chart is holding well, but I'm looking at signs here of deterioration as the MACD is just turning negative. Got a full 3.5 days to go before that's concluded. So at this particular point, I can say it's down, slightly negative in the MACD, and the stochastic is down under 80% and 78% in the weekly chart. That says we're going to watch this closely. In the meantime, I think it's trapped between 185s and 181s in the shorter term. IWM, the Russell 2000, was very weak. Went to a lower low yesterday, went to a leg E, now a trough E. If the low holds, which I think it should, stuck between a trading range It's at 170.33, the Russell 2000 iShares. Let's just say if it closes above 171.10 in the next couple of days, that's very good action. If it pulls back underneath this Roman candle into the wick of 169.50, I'm looking at it and saying, uh-oh, that weekly chart's going to become very vulnerable. Gold, look at this. Gold is up $1.30 at 1205.70. That weekly chart, it's just struggling. I think it might just suddenly pop. We've seen this kind of pattern before in the rectangle formation, but it has to go above 1213 to even, and hold above that, to even have a chance that 1226 could become a magnet, the 14-period moving average. It better hold the low that was made on the week of the 14th of September of 1192.70. And that's the way I'm looking at it. But silver, now this happened once before. Remember, silver had a fabulous move, and we thought, oh, gold is going to follow, gold is going to follow. And then all that happened is, look what happened. Leg C, very strong. I actually have this now called the buy mode. It should go to a D. It doesn't have to. I'm just saying that that's the daily chart. Weekly chart has improved a lot. Silver at 14.535, up 19 cents. This is the kind of action that I thought you'd see in gold, and you haven't seen it. Silver can't do it by itself. It has to have the party with it. It has to have gold moving in sync. High-grade copper, let's just do the metals here. Peak C, it looks like it wants to get to a leg D above 2.871, made on the 21st, and it better hold 2.75. But so far, nice bounce. Crude oil, we're going to come to the dollar in a moment. Crude oil is down 3 cents. It was up nicely. It's had a fabulous move going from the 67s all the way to the 72s. This is the cup formation in the weekly chart. You're going to watch this very closely, because if the MACD crosses positive, this crude oil at 72.06 up minus 0.02 should push very quickly right through the 73.54 high of the week of the 6th of July. All right. Here we go. The dollar trading down 13 cents. No big deal. It's still stuck in this lower range, making lower lows and lower highs. MACD's negative, stochastics just turned slightly positive. Price is holding okay above the 93.81 low that was made a few days ago. I'm looking at this and I'm saying, I'm slowly beginning to see the chance that there could be one pop-up to test the 94.55 14-period exponential moving average in the daily chart, and a close above it would say, that's it. The dollar's done most of its consolidating. Now there might be a little less to the downside, but it could actually start a rally. Hasn't done that yet. A close below 93.81 just negates any sense of strength. TLD down 30 cents at 116.50. Hasn't taken out the low of the 19th. No, that wasn't the low. 116.19, yes, the low of the 19th. Hasn't taken that out yet, but it's at 116.51. Wow. When we get back, we'll look at the TNX, because I can just tell you that TNX has gone to a new recovery high. 31.15 is the challenge, and the high so far is 31.06. Whew, that's close. I'll be right back. Basil Chapman, Tiger Ignitions Hour. Dow's up 43, S&P's up 3.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, everyone, we're back. Let me just do this A, Chapman Wave A, Chapman Wave B, Chapman Wave C. All right. So I was also about EGY, Valco Energy Inc., VAALCO Energy Inc. Now, the Vaal River was back in Johannesburg, South Africa, when I was growing up as a teenager, born in Cape Town, South Africa, then moved to a little mining town near Johannesburg. But the Vaal, so I'm looking at this. It's registered in Delaware. I wonder if it has any connection to South Africa. Anyway, it's trading at $2.53, up 7 cents. Making a leg C in the daily. A peak D was made in the weekly back in July, the week of the 13th at 338. Comes down to the 200-period moving average. Just, folks, try to use some of these moving averages. Just keep it there as guides. You don't have to actually use them. But look at this. You wouldn't even think about the $200 when this was at 1. As it's getting to 2, you say, hey, wait a minute. That's like a magnet, and it hasn't been there for a long time. So that's very important. Then it smashes through, treats it as support rather than resistance, and boom, spikes up to the 340, whatever I said, 44, 38 level, and then comes back, and for 7 weeks, 1, 2, 3, 4, 5, 7 weeks, it's treated that as a support level, and it's held. Now it's above the 14-period moving and the 9-period moving average at 254. MACD's not good. Stochastic's trying to turn up from 22%. Monthly chart has gone to a peak C, huge moves, going from the, what was that, 58 cents or something? Yeah, 68 cents level, all the way to that, it went to $3.38. And now it's down at 254. So I like it, yes, and I mentioned in the den, looking at some energy names. Strong relative strength. Daily looks very good. Weekly is improving. If you want to be long this, it's at 254. 250 right now. What is it? 254. Why is that? Oh, that's where it is. 254 made 250 a low today. If you're looking at energy and your assessment is energy is actually holding very well, and it should go higher. I'm just going to look at the energy sector for a moment. It's slightly different. Yeah, this is a leg D. This is doing very well at 76.81. Oh, when it's broken the down channel, the dash down channel for a potential, like a falling axe move to the upside. Yes, I like this. Okay, XLE is moving very nicely to the upside. I'm going back to your EGY, and I'm going to say, I bless it. Hachu. But I wouldn't get a full position here. I would just start a position at 250, and I just let it hang around because it looks to me like 223 is tremendous support. Hey, that's 10, 11% a risk, but not if you're holding a low cap, longer term position. So yes, I do like it. And I'm saying that if it's already on your list and you already started your position, you could add to it on any pullback towards 245 if it's a longer term position. And the next one was NOG. You know, I used to do NOG. I can't even remember what it is at this point. Northern Oil and Gas. Yeah, it's a long time ago. A, B, C, D, E. Wow, I wouldn't be surprised if this is an F/B in the weekly chart and the monthly chart is in leg C. I like it very much. I, in fact, am going to make a little note of it right here. I'm going to go, where's my notebook? Notebook, there you are. I'm going to write down EGY because I want to have a greater look at them, and NOG. Good, thank you, Coda in the Den. Now, let's do this. I want you to look at, on the way, natural gas. Natural gas is the continuous contract, leg A, B, C. Very strong move. I remember hearing a number of people, but I also remember hearing Jason Pfaff, who does the early morning kickoff show at 8:30, talking about natural gas, very positive. Back when it was in the 280s, and now it's at 303. Very nice. I'm going to say that it's breaking the rectangle formation, and at any point, if it can get to 315 or 320, I think that's going to be much better action, and say that much better action in terms of the weekly chart, because it's kind of a breakout of this very long rectangle formation. Next thing we want to look at is, I said I'd look at the TNX, TNX.X. Look, this is interesting. Daily chart, leg F/B. Weekly chart, leg C. Breakout. If it goes above 31.15, and the high today is 31.06, it's trading at 31.04 right now. This is the 10-year yield. It goes to leg D in the monthly chart, a moment to break 31.15, but more importantly, if it can get to 32, that 32.20 at any point in the next month or so, that 200 period moving average of 3.328, 33.28 will beckon like a magnet. I'm going to go to the FVX, which is the 5-year. It broke out earlier. It's already in leg D right now. And we have to think, all right, leg D, does that mean it's going to be pulling back? Well, the MACD is very strong. The stochastic's at 93%. We've got a little time to see what's going to happen. I'm calling this leg C weekly and leg D already in the monthly, way above the 200 period moving average of 26.96 as it trades at 29.85. Look at the TYX, which is the 30-year. The TYX hasn't gone to higher than the peak D that was made on the 19th at 32.48. This is a U-shaped pattern that we've seen so often, and it's gone to a leg D. That'll be a leg E in the monthly. And let me just show you this. Fed comes out tomorrow with all its enunciations. I'm looking at this and I'm saying that 31-year bear market in the yields came to a conclusion back in July of 2016. It was at 21.02. It's it gets smoothed out, but let's just say 2.1. Now it is about to test the upside, and it's done it before. It did it in 2009 through 2011. It kept testing the Chapman wave inside track repellent zone, and went slightly above it and then pulled back. Same thing here. It's on the line right now. It's about to go above it. I've drawn this rectangle formation here to show how long the rectangle formation can last. This one goes back to around about July of 2014. Yeah, 14. So yeah, they can last a long time. So keep in mind that everything points so far to rates moving higher. Okay, that's really what I wanted to say. So I had a question about, I had a question yesterday or the day before about the TBT. Is this the time to buy the TBT? I'm sorry, I didn't actually look at it. It's not a big deal. It's a difference of 50 cents or 60 cents. What I was going to say is, because of the weekly chart of the TBT, which is the ultra short Lehman, funny we talk about Lehman, there is no Lehman, ultra short Lehman 20 plus year Treasury bond ETF. I was going to say, Paul, if you wanted to start a position, realizing that we're at the top of the range and that it's either going to break out spectacularly or it's just going to come back and pull back for a little while, could go down to the 37.50, 37 area over a period of a few weeks. If the market starts to really take a dive, money could flow into yields, make the TLT stronger, the TBT weaker. I'll talk a little bit more about it when we get back. I'll be back, guys, at 40.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment, or swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
As we go to our first caller, I just want to show you the E-mini is 2028.25 is in a rectangle formation going all the way from 1130 to 2625 or something. Can you believe it? Like a 2-point range, and it's just been stuck there. I think it's going to break out of that and probably pull back a little bit. All right, so we're going to go to Roy. Hi, Roy in Boston.
Yes, hi Basil. Morning. Happy Tuesday.
Yeah, same to you.
Excellent. Yeah, Basil, wanted to give you a quick call. I was trying to see what your thoughts are regarding the market, where it's going right now as far as the Dow go. We're trying to get back in it, and I know last time I spoke with you, you were mentioning, when the Dow collapsed like 3,000 points, something like that, a few months ago. You mentioned to, to kind of put, put some money in, not all of it, and then see where it goes, that kind of thing. Now it's back up to the high again. What's the thinking right now? From yourself and the team there, as far as the market is going. Am I going to be able? Should I wait and get back into it, or what's the story? Is it kind of retrace again, or?
That's a really good question. So there are a couple of things that are going on right now. The Dow made an all-time high. It broke above that 26,616 January the 26th high after pulling back to 23,344. The dip that we were looking at actually was just like really briefly. It went under 24,000 and ran up to 25,700. Then it dipped under 25,000 for about an hour or two, and then it took off. Now what's happened is you've got a U-shaped pattern in both the weekly chart and the monthly chart. The way I'm looking at it at this particular point, this tentative action that we've seen in the Qs, the NDX 100, the IWM, the Russell 2000, and the S&P, after they've made the recent highs, is telling me that the Dow needed to play catch up and has done that. Now there's a chance, especially when you look at this both geopolitically and you look at it in terms of the rotation that's going on through the different sectors, the fact that the semiconductor index is still weak, even though they had a nice day yesterday. It's back very sharply down today. I'm looking at this and I'm saying, if you're looking at an index and you're looking at the big picture, now my big picture still has us in a situation where there should be a coda phase, and that coda phase is going to be where it's a period of recognition, where other countries, you see money coming from other countries, as it did when Japan was turning around in 1986. The yen went stronger, and you saw money flowing into Japan. You saw the United States sending their CEOs over to Japan to learn what they were doing right. That was also the time, if I'm not mistaken, that they bought either Rockefeller Center or one of the icons in America, and that was it. 1990, they turned around, and Tokyo, the Nikkei saw its major top. I am suspecting that we're still going to have something like that, and if we do have it, you will see, and one of the reasons why we went long the IAA the other day, and it was just very brief for a very small percentage loss, 1% I think, is that when the iShares, the broker-dealer and securities index, really turns to the upside, and all you hear are people starting to talk about the stock market. I'm going to ask you a question. When last did you go to a gathering, maybe friends, family, whatever it is, where someone brought up the stock market as a topic of interest? Has that happened to you at all in the recent past?
Yeah, definitely.
So people are talking about the stock market. Are they talking about stocks that they've bought that have done fantastically?
Yes.
Okay.
I'm not sure. I mean, I was looking at. So are you suggesting to go long at this time?
Okay. So now this is what I wanted to say. Because there's a much bigger picture, and that regardless of what any downturn comes about in this part from now to the end of the year, I suspect we will still go to higher highs, and that there will be this whole fad of the stock market. I still think that that's going to happen. I don't see how you can have a 9-year bull market without turning every corner and seeing people whispering about the latest stock that they bought and making a fortune. And I don't think that's happened. People who have been in the market for a while are saying, wow, I can't believe that my whatever it is has done so well. That's very different to having it as the topic of conversation where, when I was playing tennis back in 2000, even in the tennis courts indoor, you could see a ticker that had CNBC. This is the exact opposite. People are kind of very shy about talking about stocks. They do mention it, but it isn't like it's top of their thoughts. So I'm saying I still think that period is still to come. So what I'm going to say to you is the market, the Dow is at 26,000, let's call it 600 right now, because you have to be prepared for another sudden 1,500 or 2,000 point decline. If all of a sudden negative things come together, you always have to be prepared for that. I'm not recommending going fully long, but what I am going to say is in your bigger portfolio, don't be afraid to add something that is, say, Dow type in a mutual fund. If it's industrial type sector, I would add something now as a long-term position. But I'm waiting for a much deeper correction to start saying to subscribers, okay, now for this next big phase that I'm anticipating, we might be a little early, but now you can start adding to your position as opposed to individual stocks. But I'm talking about like a Dow, Diamonds, or a SPY, and I think that you could maybe start a little position now, but don't think that that's the position. That's just to get in, because you never know, this market hasn't given up yet. It still keeps trying to rally. I think there's going to be an opportunity at some point over the next 6 weeks, 8 weeks maybe, where there's just suddenly bad news and the market just goes down, down, down. And that's where you're going to be able to make a better decision with a better risk reward. That's all I'm saying, is that if you want risk reward, then I much prefer to have a 1,500 or 2,000 point decline and start to look at it that way. But as the long term, I think if you want to nibble a little bit here, realizing that that's at risk for maybe 10 or 11%. But if you're looking at the market going into the 27 and then 28, maybe 30,000s, it's a risk worth taking. So that in that regard, that's what I'm saying, that if you want to consider just starting a little position in an index fund that's more industrial type, that's fine, but know that that's not the real position. I think the real position will come at some point where we just, out of the blue, just everything goes wrong, the market really takes it on the chin. That's when I want to start the bigger position. And the only reason is we haven't had a pretty decent correction for a long time. It's getting closer and closer to that happening.
Yeah, that big correction, are you looking at like the 32% correction, that kind of thing?
Hold on a second. Let me give me some decent numbers so that I don't want to just throw it out because the commercial's coming. Hold on, Roy, we'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back, and we're back. Roy, you still there?
Yes, hi Basil. Yes, yeah.
Okay. I just want to go to the very big picture, and the very big picture says that regardless of whatever happens on the downside in the Dow, there should still be a phase where everyone is talking about the stock market. I've never seen it not happen in all the years that I've been in the market when there's going to a major top, and I don't see why it shouldn't happen again. There isn't anything sexy right now, like even the Bitcoin, which was a year back in December of the year before and January of this year, was the talk of the town. There is nothing on the radar that people are just babbling about and saying, "Oh, look at this! How much money we've made." Even the medical marijuana stocks, are going up, and then they come down so sharply that people, you can tell there's a certain nervousness there. So I suspect that there's going to be some kind of a sharp decline at some point. But my big picture says that we should still have a huge, I wouldn't even call it a national, I think it's going to be an international move to the upside in stocks, where just about everyone everywhere is talking about the stock market. If I'm correct, then even if you bought right now at 26,591 in the Dow, and it dropped, eventually you're going to be absolutely right because it's going to go much higher. I like to look at risk reward, and therefore it made me a little cautious about that entry for the 1,500 to 2,000 decline. We haven't had many big declines at all. I suspect that if there is going to be one, the next 6 to 8 weeks should give an opportunity for a pullback. So that's really what I'm saying. So if you want, start maybe a position, you can start a small position, just a very small position in something like the Dow. But the real position, I think, is going to come later when there's a sudden, I'm expecting some kind of sell-off at some point this year still.
Well, you're saying that you see a decent pullback sometime by the end of the year to as far as the risk reward.
I think even yes, even with the rotation through the different sectors, for instance, the steel stocks, which we in my opening call, we've been long, doing fabulously. And United Technologies is still doing really, really well. But I think there's a chance that we're going to have something that happens that just makes the market really nervous, and that's a better chance for risk reward for an entry point, a bigger position entry point. Is that, am I making myself clear?
Investing into Basil, and then buying the diamonds. That's just basically buying the stock market. So that's like a big, huge mutual fund in a way, right?
It's the same as a mutual fund that's based on the industrials, yes. But buying the diamonds is a different kettle of fish to buying the Index 100, the QQQ. There, I think there's a consolidation that's going to take a little longer. I might be wrong, but I think it'll take a little longer. But I think that the industrials are acting really well at this point.
And so is there something else besides the diamonds that might be more diversified, or are the diamonds are basically all industrial stocks? Is that right? You said.
Well, funnily enough, we call them industrials, but they're not, because look, they've got Disney. It's got Disney. Disney right now is up nicely. It's up $1.22. It's in this range. It's going towards the upper range. It's got American Express. So that's not an industrial. And American Express looks to me like it's making a short-term top. So it's a mix, but I kind of like the mix because it's also got a Merck, which is Merck right now is Merck pharmaceutical up near its all-time high. It's a real nice mix. I like the Dow. The way it's made up now, I like the way that it's made up. And when Goldman Sachs eventually gets back on track, it's acting very poorly here. I think it's going to be a leader in the Dow, but we have to wait for it to start building strength. So that's the reason why I'm looking at the Dow. And at this point, I still think the Dow has got the right kind of mix for the kind of market that I'm looking at. So, but if you want, I'll do a little more work, and maybe I'll discuss it again tomorrow in terms of the levels that I'd be looking at, the way that I'd look to enter the positions. So you don't have to jump in right now. Let me do some work over the next 2 sessions. I'll talk about it in more detail as to what I think would be an appropriate entry point and how you would scale in.
Excellent.
Okay.
Very good. Thank you so much, Basil. Really appreciate it. Yeah.
Thank you very much for calling, Roy. I appreciate you calling. I will do my best to try to answer it as succinctly as I can over the next 2 days. Thank you for calling. Let's go to Ben in Tallahassee. Ben, follow-up question.
Yeah.
Fire away.
Hi, Basil. I couldn't resist. So I was fortunate enough to get to add to my position in the summer. So
hold it.
Wait,
stop. Ben, stop.
Yeah.
You weren't fortunate. You planned very well, and you strategically did exactly what you should do. You spoke about it.
Yeah.
You did it. I failed to do that. I should have said the next time it drops below 25,000, we're in no matter what.
But here's the $1 million question I have then is when you say you're expecting a much bigger drop, I mean, are you thinking that it could potentially retest or even go lower than that 24,000? When you say the bigger risk reward is coming?
Now that we've gone to the 26,616 high and popped above it, we haven't closed for a second week above it. This is going to be a really important week. It's accomplished almost everything I wanted to do. I'll discuss this now. I was going to send it out to subscribers, but as we're going through this whole transition thing, I thought I'd wait and maybe this coming weekend I'll do it, but I'll start discussing it now. I showed it yesterday. There's a very strong, very long term from the 1980s. 7 low of 1616 on the Dow. There's a trend line that I drew, and I was going to do last weekend already. I started working on it, and this dashed cyan line goes all the way to 27,200. Well, that's only 700 points above from where we are. And that whole area from just above where we hit the high last week, so let's call it 26,770. To 27,200. There's a trend line, 2 trend lines that make what I call the Chapman Wave Inside Track Repellent Zone. And that repellent zone has been so strong, the pattern going from an E to an F, perhaps it's a B, but I'm calling it E to F in the monthly chart, the V-shaped formation that goes slightly higher and then starts to pull back. We saw it back in 2007. We saw it going to D to E back in 2000, 1999 to 2000. I've seen it enough times to say it happened again back in 1991, I think, 1990. So I'm watching this V-shaped pattern really closely. But we've never seen, I don't recall, I do remember a period where we had a food stock, I think it was General Foods, I'm not sure. There was a food stock in the Dow that by itself, on the weighting of General Food, I think it was General Foods, there were 3 generals in the Dow, General Motors, General Electric, and I think General Foods. And that one stock, during a particular period of sideways movement in the Dow, kept the Dow stable because it has such big moves on takeover talks. And the Dow didn't fall because of that. So I'm looking at this and I'm saying, okay, do your assessment on the different stocks. Can you hold on through the break and I'll finish this up?
Yeah, absolutely.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back with Ben, and just as we did with Roy earlier, we're talking about the Dow. And what I wanted to say is this pattern that we're looking at, this V-shaped pattern, is a familiar pattern to me. That doesn't guarantee that it has to follow the rules that it's done before. But what I am saying is that, and the reason why I brought up that I think it was General Foods from back in the 80s, it held the Dow up by itself because it was weighted so heavily. It's because the rotation that we're looking at now says to me that if there is this continuous rotation, that even within the Dow, you could get, say, a Disney suddenly taking a dive because of all this communication stuff, and all of a sudden Goldman Sachs picks up steam and moves ahead. So that kind of balancing of indexes says that at this point, I can just say there's a chance that we will test the 25,000 level again. Since you're back in at 25,000, I don't think that's something that you want to play by maybe taking money off and doing anything like that. I would just keep that position. And if it comes down to 25,000, I would say, okay, now we're going to have to start to see where we want to add to the position if I want to add. But at this particular point, the Dow hasn't even broken the 26,300 9-period moving average in the daily charts. I think we've got a couple of days here where I'm going to be able to filter through the strength. How long can the stochastic last flat like this? The way it looks, it could go for another few weeks without breaking 90%. As long as the price is holding okay. So I'm going to say to you, I'm going to do the same thing as I mentioned to Roy. I'm going to take a couple of days. I'm going to talk about it on each show. This will be my focus for the next couple of days. I will talk about it because it's really important. I should have spoken about it in a different way earlier on. And I should have said, because my big picture in the code of formation is still looking for the entire country to be talking about the stock market, every pullback is going to be a pretty good buying opportunity, especially if it's a deep pullback. Where is going to be the issue? So let's do this. Ben, I'm good. You stay in your position right now. I'll talk about it over the next 2 days as I see it, whether or not the pullback that might be unfolding now will be a deeper one, or whether we might have to wait a little longer for the New York Stock Exchange to make its high. Okay?
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.